I originally started my career in a white shoe law firm in New York before coming to the Obama Treasury Department and then overseeing the financial services portfolio in the Obama White House. Spent some time teaching grad school at the University of Michigan before then coming into this role. Oh, some go blue folks, some Wolverines in here, sounds like. And as you said, I came into this post about 3.5 years ago now.
That's great. Is there something most surprising about the job?
Oh gosh, every day brings a new challenge and surprise. I think, for me, traditionally the office had really been focused on enforcement, which is incredibly important, and we've brought about 117 enforcement actions in my time. But for me, enforcement really is the last resort. We want to write strong rules and have those on the books. So to that end, we've done now 59 regulations across all of the areas that we cover, about 100 pieces of guidance, 117 enforcement actions. And then we've really been building the department so that it can be a modern regulator and oversee an industry that moves very quickly. So in my time, we've hired about 550 people. We've promoted 450 of our teammates. And then we've been really, really focused on kitchen table issues. And so every year, alongside our enforcement actions, I've been very, very focused on restitution for consumers. So in my 3.5 years there, we've now gotten about $650 million back to New Yorkers. So real money in people's pockets, and I'm really proud of that.
So speaking of regulations, we had our Hill Day here yesterday, and so one of the things that we learned during our Hill Day is the Senate and House is looking at doing some voting on repealing one of the rules that has to do with overdraft. Mm-hmm. And I think New York currently is in the process of working on those rules. Yeah. Talk to us a little bit about how you think about the tensions and the framework, and especially in the current environment.
Yeah, so we had a mandate from the legislature to write overdraft rules, and so those rules are currently in the proposal phase. But essentially what we did is, because we regulate such a diversity of institutions, from GSIBs on the one hand to very, very small community banks on the other, we really tried hard to write a rule that could fit those different business models. So for instance, we said no overdraft fees over $20, no overdraft fees larger than the purchase itself. You can't charge more than 3 overdraft or NSF fees in a day. You can't charge an overdraft fee for an electronic transaction that was instantly declined, right? We really tried to be specific and look at all the ways overdraft fees and non-sufficient fund fees get charged, to make sure that we were addressing all the ways that happens to consumers. So as I said, the rule is currently in its comment period. We're really looking forward to feedback from the public and from all of our stakeholders, and hopefully move to finalize that rule in short order.
And then do you think the current federal landscape change or influence your current work at all?
No, we obviously work very closely with the federal government, be it folks in Congress on both sides of the aisle, with our federal regulatory counterparts, with our international counterparts. But for us, our mandate in New York is very clear. It's set by the governor and the state legislature, and we execute accordingly.
Oh, that's really interesting. Yeah. Well, I want to jump into something that is near and dear to folks here, the Community Reinvestment Act, right? It's the other CRA for a lot of folks here in Washington. CRA stands for something else, usually the Congressional Review Act. But for us here, it's always the Community Reinvestment Act. Yeah. New York, of course, fills in the gaps in the federal regulation. Talk to us a little bit about how that has affected New Yorkers and your thinking on that issue.
Yeah, so New York is one of, I think, maybe 7 states that have a state-level CRA. We had it on the books, of course, when I came in for banks, but as this crowd will know well, the majority of mortgages are written by non-bank entities. And so for us, it was important to fill that gap and apply CRA protections to the non-bank mortgage industry as well. It's obviously a little bit different, right? They don't have a deposit base, so whereas there are investment requirements on the banking side, right, those things don't apply the same way when you have a non-bank mortgage lender. We had to think a little bit differently about the assessment area because they don't always have the physical footprint that a bank might have. Those rules are also in the proposal phase. But given that the majority of residential mortgages are made by non-bank lenders, that felt like a really important gap to fill. And then we have a great unit, the Consumer Examination Unit inside DFS, that does examinations for all kinds of consumer protection laws, including the Community Reinvestment Act, to examine our institutions to make sure they're giving credit across communities as they should and in a non-discriminatory manner. And I think similar to the federal rules, right, we give grades to our institutions. We require remediation where appropriate, because we want to make sure that all New Yorkers get the credit they need to live healthy, robust financial lives.
Now, we're following that really closely. Yeah. So thanks
we're excited about it. So we encourage people to make comments on that as well.
I want to switch gears for a second and talk to you a little bit about AI, right? That's a topic that has come up a lot in the last couple of years. We increasingly talk about, you know, the efficiencies of AIs. I now do legal research with AI, right? That's I don't even think that was a thing in law school back then.
I wish it was a thing in law school. That would have
probably law school a lot easier, right?
It would have made it a little easier.
I'm really curious on how you think about some of the tensions between efficiency and consumer protection, and how you think about this very dynamic field. Well, on the one hand, there's clearly a need for regulation. On the other hand, you want to see a growth and innovation.
Yeah, absolutely. I mean, I think, you know, one of the things that's so special about New York, because it's the financial capital, we really do think a lot about how you protect consumers and markets, and at the same time, how you can be good for business. And as a regulator, right, I have to, in New York, our mandate is both of those things. So I have to find that balance of making sure we're protecting consumers and markets, we're guarding against risk, but we're not doing it in a way that drives business out of New York. I think for AI, it's so big, right? Everybody's talking about AI and agentic AI and generative AI. And so for us, we really wanted to take an approach that was specific to some of the industries we regulate, and within that, some of the activities they conduct. So for instance, last year, we did guidance on insurance underwriting and pricing and AI. And there's other things in insurance we could have tackled, and we probably will tackle, customer service and claims management, but we thought, let's start with this narrow slice. Even with guidance, just like with our rulemaking, we very often put them out for public comment as well, because we think that's important to be engaging our stakeholders that way. But what we effectively said to the industry is, it doesn't really matter what technology you're using. This applies to AI. The framework of non-discrimination applies when you are using AI. And so we expect you to understand the algorithms that you're using. And obviously, insurance is sort of a tricky space because it is a business of discrimination in the sort of truest sense of the word, in that it's risk-based, right? So we don't allow unfair discrimination, but there is price discrimination according to risk, right? Anybody who has like a 16-year-old driver in their household understands what happens to your insurance premium when you add them to the policy. Yeah, some nods I see. So for us, it was, how do you prevent this unfair discrimination if there's AI in pricing and underwriting? And we said these principles of unfair discrimination still persist, and we expect industry to be able to understand and explain the algorithm, to test the algorithm to make sure that there isn't disparate impact. You know, industry came back and said, well, how could we possibly test? And we said, well, here's how. There's plenty of statistical methodologies that we expect you to use. It will not be okay to say, well, we hired a vendor, right? It's a third party that does the algorithmic work. It's not us. We expect the industry to be accountable for the parties that it works with and the vendors that they contract with. So there really is, and there's governance requirements that we put in place. So we really want to make sure we're holding them accountable for the fairness of the technology that they're using. But in a different context, we also did guidance for AI and cybersecurity. And that was a place where I think we really tried to show the balance of the benefit and the risk. On the one hand, AI really strengthens the threat vector of cybersecurity, right, or of cyber incidents. Gone are the days where you have to be a nation state to perpetrate a large cybersecurity crime. Now you can be an individual in your garage with the help of AI, right, and really do some real damage. So we wanted to highlight that for our regulated entities, but also highlight ways that they could use AI as part of their defenses to protect their own infrastructure, but also protect their consumers, right? So I think that's another example where we took a narrow slice. And And then we're looking at ways that we can use AI as a regulator, right? And use these tools to help us protect consumers, help us preserve the safety and soundness of the institutions we regulate. I will say one small example, I'll give a second example. We're piloting a chatbot now. So if you're a consumer and you go to the DFS website, right, it might take you a while to hunt around and find the rules that you're looking for or the guidance or the whatever consumer alert you might be interested in. But if you have a large language model-based chatbot and you're a consumer, you can come to the website and use your plain language, whatever language that may be, and ask the website a question and get a plain language answer. That's a really powerful thing if you're a consumer. And similarly, we're now working on a project with the State University of New York where we're looking at mortgage data, insurance data, and weather data to start to think about how climate really impacts disadvantaged communities, communities of color, and other things when we think about mortgage, insurance, and what climate change is going to do to a lot of those areas.
So it sounds like you've done a lot of outreach in this area and thought a lot about the issue.
Yeah, absolutely.
Are there themes or issues or subsets of issues that have surprised you that have been?
No, I don't think so. In general, when we're talking to industry about this, right, there's plenty of sort of bad behavior, and we work very quickly to address that. I think in general, people are trying to move slowly and carefully in the sector, so we want to make sure that we're providing the proper guardrails and, again, reminding people about the existing regulatory frameworks and that they still apply, even in the case of AI usage.
That's really interesting. One of the themes from us talking right now, what I'm picking up on is that being a regulator is not static. It sounds like you're constantly reacting to different needs and challenges, right, to make it both efficient and responsive.
Yeah, I think we need to, obviously there are always surprises, right? So we need to be reactive, but we also need to be forward-looking. And I think for us, that's what we really try to do is anticipate where industries are going and make sure we're keeping abreast of those developments so that we can be there to protect consumers, right? We recently, about 2 years ago, we got authority to regulate pharmacy benefit managers. There's not a lot of regulation in that space. I think it's maybe 11 states and nothing yet on the federal level. But this is an area, an industry that purports to provide discounts on prescription drugs to consumers. But when you really dig in, you find that there's a lot of rent seeking that happens there. And of course, prescription drugs are one of the fastest increasing costs in healthcare, and they're one of the biggest contributors to increasing costs of healthcare. So if we can get at these middlemen, regulate them, oversee them, provide transparency to consumers, that helps bring down the price of prescription drugs, helps bring down the price of healthcare, right? That's important to do.
That's speaking of future and AI. So like in 5 years from now, perhaps even back right here, what are some of the things you think we'll be talking about in those spaces?
I don't know what we could be talking about tomorrow. It seems like things change so rapidly now. Look, we're clearly still going to be talking about things like AI and cybersecurity 5 years from now. There's a lot of consumer protection work that the states are doing, that New York is doing around homeowners insurance in the face of climate change. Typically the insurance industry anticipates, I think, spending about $200 billion on natural disasters / catastrophes. In the US, the California wildfires were about a $50 billion catastrophe. So already by January, a quarter of the expected damage that we expect to see for the country for the whole year has already occurred. So clearly that insurance landscape is changing, and we need to make sure we're thinking about that for homeowners, for renters, for drivers as a regulator. The new things, I think PBMs are still going to be around. We're still going to be thinking about healthcare. Obviously the AI stuff, I think, will just get faster and faster, and so it's really important that we're making sure that people feel protected and safe and that they can conduct their financial lives in a way that feels productive and safe for them.
We might still be talking about the Community Reinvestment Act.
We might still be talking about a Community Reinvestment Act at the federal level. Hopefully by then our will be fully in place in New York with respect to our non-bank lenders. So.
I'll end us, our time is almost up. I'll end us on a note that may be curious for the folks here in the room. Any recommendations for a book or TV series or anything?
Oh gosh.
Anything you're watching?
That's a tough one. I mean, is there anything on TV that's not by Taylor Sheridan? Like, are there any shows that are not Taylor Sheridan shows? I don't know. As somebody who grew up in the Southwest, I find those sort of appealing, but there's a lot of them. And anybody who knows me knows I spend a lot of time watching HGTV. I find it really soothing to watch renovation shows. I don't know why.
I'll check it out.
Yeah, exactly. I know. I wish I had a more like high-minded recommendation for you all, but that's how I relax anyway.
Well, I think that was the last question I had, and thank you so much for being here. This is the Superintendent, Adrienne Harris.
Thanks, everyone.